Are you maximising the use of your superannuation environment? Superannuation is a great and tax-effective vehicle for your investments, with earnings taxed to a maximum of 15% during accumulation and 0% in retirement phase. Also, with some of the contributions going into super, if they're made with pre-tax contributions, they're only taxed at 15% compared to your marginal tax rate. Or you can make an after-tax contribution that doesn't get taxed on the way into the fund and doesn't get taxed on the way out. But it's really important to understand what the limitations are on how much you can contribute to super. For your concessional contributions, which will cover things like superannuation guarantee from an employer, personal deductible contributions if you qualify, or salary sacrificed amounts, for this year the limit for most people is $25,000. However, from the 1st of July, the standard cap that applies to most people will go from $25,000 to $30,000. And in fact, if you're age 49 or above on the 30th of June this year, then next financial year, you'll have access to that higher $35,000 cap. There are also similar limitations that apply for your after-tax contributions. Generally, it's $150,000 per year. If you contribute above that, you could invoke a 3-year averaging rule or a bring forward provision that says you could do up to $450,000 this financial year, but make no further after-tax contributions in the next 2 years without a penalty being imposed. But because there is a change in the concessional cap, there is also a change to the non-concessional cap, or the after-tax contributions from the 1st of July, where it will go up to $180,000 per year, or using that averaging provision from 1 July 2014, it's the potential to do up to $540,000 in one particular contribution. To work out whether this or any other end of financial year opportunity applies to you, please speak to your financial advisor.